high income people don't do it yourself in almost any area of their life. They don't DIY their landscaping or their pools or their nannies or maybe even some of their transportation. Why are you DIYing your mental and physical performance? See, again, I think the disconnect is that a lot of the fundamentals are free. It's the execution that gets expensive. My name is Brian Pannuzzo. I help successful professionals build an elite's body and mind without sacrificing work or time with their family. I know your life because I lived it for 20 years inside of corporate America myself. Welcome back to the Success Lift podcast. I'm your host, Brian. Thank you so much for being back with me again this week. And I want to dive right into a topic that I love, that is near and dear to my heart, and very familiar with many of the people who I work with and many of the people who pay attention to me. If you don't know, I was a financial professional. I was a Wall Street guy for 20 years. Over 70% of my clients are financial professionals, and that's spread out amongst the various different niches inside of Wall Street or financial services. I have wealth management advisors, I have traders, I have salespeople, I have research analysts, I have portfolio managers, I have insurance people, I have people inside of every different area, private equity, private credit, hedge funds, different areas of the financial services industry. So it's a very broad brush that people think is like one particular job, like a stockbroker. But the truth is that there are many, many different verticals, niches inside of the financial services industry. And I tend to work with many different people who do these types of jobs. But they all have a fundamental understanding of knowledge that, quite frankly, so do you if you're not a financial professional. And all of my clients who are not financial professionals, the 28-ish% or so right now currently, and that's probably about historically accurate. I would say like 7 to 8 out of 10 of my clients have always been financial professionals. They all have a understanding of this topic. And the topic is this concept of active management, money management versus passive money management. And so just a super quick primer, because I know that you're going to understand this, and you may already know what I'm about to talk about from the perspective of money management, but I'm going to tie it into health, fitness, coaching, mindset, and the things that we care about here inside of my program, which are the 3 pillars: mental, physical, relational. I'm pointing to the t-shirt. If you're watching this on YouTube right now, those are the 3 pillars of my program. I find that most people that I work with had a very similar life to me, in that they created career success, professional success, but at a cost. And those costs are usually one of these 3: their physical performance, their mental performance, and potentially their relationships, whether it be their marriages, their relationships with their kids or their friends, their social life. Everyone has let one of those pillars, if not more, in my case, it was all 3 of those, suffer very significantly. And so our work together is predominantly around those 3 areas. But we love to talk about work, and we love to dive into what's happening inside of the office, because it gives me a little bit of a fix, especially for my financial professionals. But oftentimes, most of the root cause of our inability to manage those 3 very important areas of our life come from what's happening in the office. And so it's a very fluid and open conversation about career and business as it pertains to what's happening outside of the office. And the more we can control what we're doing outside the office, the better our reactiveness, our reactivity goes with inside the office, okay? So there's a quick primer on who I'm working with, what we do, why we do it. And I want to talk about, as I just mentioned, this concept of active management when it comes to money management versus passive management when it comes to your financial assets. And so very quickly, passive management would be you buying an index fund. Let's just call it the S&P index fund for lack of a better example. It's the most common and broad one, versus you paying a financial advisor to advise you, versus you paying managing fees for your investments via hedge funds, private equity funds, actively managed mutual funds, meaning that there is a portfolio manager with a team of people who are on a day-to-day basis moving positions around, right? They charge you a fee for that. Of course they do. They need to get paid. The fees for those active managers are definitely much higher than fees for passive management when it comes to your financial assets. But when we look at the long-term returns of active versus passive management, they're really not that impressive as it pertains to active managers. Now, that is a broad category of all active management. Now, there are managers who outperform the indexes, let's say the S&P index, on a fairly regular basis. And they do very well, and they get compensated very well for that. But as a whole, as a broad brush, active management does not outperform passive management. And so the next question that I hope you're asking yourself, or that you may be thinking about, if you're not exactly sure why it's important to have those the vehicles for investment and the large sums of money that go into these types of investments, why would somebody put their money with an active manager? Why would I pay additional fees to get inferior returns in the market when I could just park my money in a bunch of index funds and call it a day? And why this is relatively important is because the fundamentals of phenomenal health when it comes to mental and physical performance are largely free, right? Walking is free, sleeping is free, water is free. Things like protein and lifting weights and meditation, free. Protein, lifting weight, the gym membership, relatively inexpensive, right? The food that we consume, yes, food prices are higher, but it is not even close to the most expensive thing on your credit card bill on a monthly basis. You can use your breath to control your state and calm yourself down. You can meditate for free. Why are these things that are free so infrequently used with the proper dosage and consistency amongst the general public? Okay? So like when you go to a financial advisor, they're going to give you recommendations like diversifying and keeping your fees low and staying invested in the market and not to time the market and to dollar cost average and all these different financial mumbo jumbo type of concepts that I know many people are familiar with. And quite frankly, you can do all of those on your own with index funds. And so why do people pay billions of dollars a year for active management, knowing that a simple solution like an ETF, an exchange traded fund, exists? Okay? The answer is simple, and I don't know if you've ever thought about it before. Information is not the bottleneck in this equation. Implementation is. I'll say that again. Information is not the bottleneck. Implementation is. And so what do I mean by implementation versus information? The information to live an incredibly healthy and vibrant and active life is largely free. Like I just said, I just listed a ton of things that you could do on your own and you could be incredibly healthy. You can walk for free, you can run for free, you can drink a lot of water for free or for a very minimal price. You can eat relatively healthy food based on the person that's listening to this for your budget, for a relatively cheap price. I know food prices are not as cheap as they used to be, but I also know that's not even remotely close to the largest expense you have on your credit card on a monthly basis. Right? You can use your breath, you can sleep more, you can do all these things, you can get social connection, you can connect with other human beings, all free, all free. Why don't we do it? Why don't we do it? Why does a platform like Robinhood have an average account size of $4,000 versus a place like JP Morgan Private Wealth that probably has a minimum of $10 million to start? And I believe Goldman Sachs Private Wealth has an average account size of $70 million. What is the difference between those two types of people and investments? Okay, because ultimately, if you just put your money in the same vehicles, both vehicles are available, right, at these places. Now, I understand there are far more sophisticated vehicles available at a JP Morgan Private Wealth and a Goldman Sachs Private Wealth, and we're going to talk about that too. But if we just went S&P index versus S&P index, why are people at Robinhood only averaging the account size of, let's say, $4,000 versus $10 to $70 million at another place? I'll tell you why. The people at JP Morgan, at Goldman Sachs, at Bank of America, at Merrill Lynch, at Morgan Stanley, at all these different places, they value the expertise of somebody who can guide them along the way. They value the accessibility to more sophisticated choices. They don't just want the plain vanilla information. They don't just want the basic package and the basic option. Sophisticated people want leverage, okay? You are being paid as a financial advisor to guide somebody along the process, just like I get paid as a coach to guide my clients along their journey. I tell my clients all the time that I am riding shotgun in their car in a long distance cross-country trip. And it's my job to help them devise the turn-by-turn directions based on their destination. It's their car, it's their destination, they have to drive it. I cannot drive the car for you, but I can help you get there. And I can help you avoid traffic. And I can tell you when it's time to take a rest. And I can tell you when it's time to get your ass back on the road because you've been resting for too long. I can tell you when there's a detour coming up where we should be going. I can provide all of these answers for you to make your journey more smooth and to help you get there faster, all right? And that's what coaching does. Coaching gives you a plan that fits your real life, not a fantasy life. Coaching allows you to remove friction from these stressful and chaotic times. It provides you some guardrails. I tell my clients all the time, I want to put blinders on them like they're a thoroughbred horse and ride their asses to the finish line. All right? Coaching helps you course correct. It helps you during times of shit that we're about to enter. Travel, holidays, stress, volatility. Right? I can help you make decisions faster. An advisor can help you make decisions faster where if I'm sitting here by myself, I may be hemming and hawing about like, what do I do next? Is this the right decision? Second guessing myself. Coaching helps with that perspective. And so the most important thing for me though, as it pertains to an advisor and why I pay to have my money managed by a professional who's unemotional about my outcomes and will just remain objective when I want to lose my shit, is that human beings make really, really poor decisions because of emotions. I'm sure you can remember a time that you made an emotional decision about a trade or an investment and you highly regret it because it was a big mistake. I can't tell you the amount of mistakes I've made with my own personal account, my PA as we would call it back in the day. I was the worst trader in the world in my PA. I would lose money left and right thinking I knew what the hell I was doing. I would get emotional just like everybody else. I would do things based on the little bubble that I felt like I was in at the time, as opposed to zooming out and having a bigger picture in terms of a perspective to make the right decision based on risk tolerance, long-term goals, how I currently feel, what I might need my money for. We overreact. Human beings overreact. People panic sell. They chase frothy buying opportunities. They overreact to short-term noise. We know better. I know better not to do it, but I still behave poorly without the guidance. You know better than to be in your pantry at 10:30 p.m., but you still behave poorly. You know better not to drink the extra 3 or 4 beers on a Saturday afternoon, but you still behave poorly. Then you regret that behavior. But if you were accountable to a process, if you had made commitments previously, it's a lot harder to do it. Can you still do it? Of course you can. You can do anything you want to do. But it's a lot harder to put the thing in your mouth when you know that you've committed to entering it into an app that your coach is going to see. It's a lot harder to miss the workout when you've committed to 3 or 4, or whatever the number is for the week. And your coach is going to follow up and ask the critical question, why? Why did you not do this? Why did you do this? Tell me more. Give me some perspective as to what was going on. Oftentimes, that's enough for people to just not do it. Do you know how many times I've looked at a piece of food or alcohol or whatever and thought to myself, do I really want to enter this? Do I really want the person that I'm working with to see this? Do I really want to talk to them about this in our check-in, where they hold me accountable to the promises that I made? Or is it simpler just to put it down and not put it in my mouth and to stick to the plan that I originally set for myself? Because I'm the only person that would know otherwise. You're the only person that hits the buy or the sell button. You don't have to call anybody. You just do it electronically. You're the only person that knows whether or not you're winning or losing on that trade. So we behave poorly because there's usually emotion tied to it. You didn't just walk in to the pantry or open up the next bottle of wine because you thought it was a great idea. You thought it was a great idea because you had an emotion or a feeling attached to it. And when you have these emotions and these feelings and there's no outlet for you, there's no place for you to work through those, you make poor decisions, just like I do. Just like I do. And you have access to, these alternate types of investments, these more sophisticated things when you're dealing with a more sophisticated firm like a JP Morgan or a Goldman Sachs versus a Robinhood or a Charles Schwab or a Fidelity. No disrespect to any of those places. Working with a professional at these places, they can provide more tax efficient vehicles for you to invest in. They can work through different risk-adjusted trades for you to put on. They can help you make decisions that are customized to you and not just have you do what the rest of the world does, the masses do. When a bodybuilder and a fitness coach that sits inside of a gym will just tell you that the X's and O's to getting great physical results are simple. You have to stick to a very strict nutrition plan and execute it flawlessly. And they're right. But what they get wrong is you don't live in a bubble. You don't live in a gym. You can't bring your Tupperware container of chicken and broccoli everywhere with you. You don't walk around with a gallon of water everywhere. You have to live in the real world. And yes, absolutely, you can make better decisions in almost or every environment or circumstance. But there's some times that you just can't do exactly what's required, nor should you, I would argue. And so you need to have a customized plan that fits your specific lifestyle as a busy professional, most likely sitting somewhere under the umbrella of Wall Street, so that you can get the results that you want, because you've tried over and over to do the same types of things that you used to do in your 20s or maybe early 30s. And I don't need to tell you that they're not working very well. High income people don't do it yourself in almost any area of their life. They don't DIY their landscaping or their pools or their nannies or maybe even some of their transportation. Why are you DIYing your mental and physical performance? See, again, I think the disconnect is that a lot of the fundamentals are free. It's the execution that gets expensive, especially when you're screwing it up. And going back to the podcast last week about athletes, people remember when they were able to do it by themselves. You actually never did it by yourself, like we talked about, but you may have had a whole lot more time on your hands to be able to do it. And so the most sophisticated people, the best in the world, they always pay for coaches. They pay a premium for leverage in their lives. However they can create it, they pay for it. They outsource these types of things to win. They don't DIY and do it yourself when it comes to their health and their fitness and their mental performance either. Every elite athlete has coaches, like we talked about last week. Tom Brady, Tiger Woods, Kobe Bryant, CEOs. I mean, the list goes on and on. In fact, some of the highest performers have the most amount of support around them. They have a team. And so I would ask you, who is on your team? Who are you enlisting to help you get to where you want to go? If you're index funding your life outside of the office, is there a more efficient way? And when I say expensive, most people think about it like, yeah, there's a more expensive way. Well, I don't know. Is it more expensive? I would argue you not getting the results that you want is more expensive than you forking over some money. Remember, fundamentals of great health, physically and mentally, are free. The execution is where it gets expensive. The gap between those two that's where your entire potential lives. If this resonated with you, if you think this might be a good fit for another financial professional, will you send it to them, please? I hope you're having a great start to your week. I appreciate you. Stop doing it yourself. Get help. I don't care if it's with me. I want you to get help. Go to someone else, find another paid program, find some friends that'll hold you accountable for free, but just get off the damn sidelines. Stop being in love with your circumstances. Start taking actions to change it. Have a great week. I'll see you back here next time.